speaker is only 26 years old and the founder of Calora Capital, which is a tech-focused investment bank boutique. So far, they have invested and raised capital for more than 20 companies and invested in 5 of them themselves. In their network, they already have more than 400 investors consisting of VCs, corporate ventures, angels, and family offices. So please give a very warm welcome to our next speaker, Simon Lidén. Woohoo!
Can you hear me? Oh, cool, nice. So you actually warned me about the steps here, so I opted for this route instead. Hi, everyone. How are you? Good, nice. I'm very glad to be here. I'm very excited and thankful that you all are taking your time to be here today. Firstly, I'm actually curious who you guys are. I was thinking we could do a quick show of hands. Like, how many of you are entrepreneurs? That's a few. Cool, nice. How many are investors? Thank you, cool. And corporates? Ah, not so many. I thought of more. And the rest of you, who are you? Okay, cool. Well, thank you. Like you said, I grew up as a pretty introvert, shy kid who loved reading and loved tech. So when I went into investment banking in London, I wasn't too excited about working with big oil companies. So I was more excited to work with small tech companies that did real innovation and was passionate about the problems they were solving. So that's why we founded Calora Capital. However, the industry of venture capital, even though they invest and we invest in very innovative companies, the industry itself is so old school. It's still a bunch of old guys sitting in a room and trying to decide what to invest in. It's hard to gain access to these guys, and these guys don't really scale very well. So that's why we and I are very excited about ICOs, which we will talk about today. Cool. I will cover 4 topics roughly, and those are: what is an ICO, first and foremost? What are the risks, secondly? Thirdly, what are the promises? More specifically, what can it do for venture capital? And fourth, how can we regulate this? But firstly, I want to get you excited about this. So here are some quick numbers about ICOs. And as you see, as of now, $12.8 billion has been raised in ICOs already. And it's exploding. Just 2 years ago, it was pretty much non-existing. Then it grew by 18,000%. And just to give you some perspective, it isn't as big as venture capital. Venture capital is like 200 billion, and seed is 75 billion. But still, in such a short amount of time, this has grown so fast. And if you look at seed investing, it's pretty much stagnant also. So this is something that's grown by thousands of percent each year, as opposed to seed investment that's pretty stagnant. That's why it's exciting. Also, I suppose all of you have heard about Telegram, right? Yeah. Raising over $1 billion in ICO. So it's not only the total amount of capital that's raised via ICOs, also that larger companies are raising via ICOs, and also the type of investors going in. These aren't only like small hackers sitting in some dorm somewhere. These are like the top venture capital firms all around Europe: Sequoia, Benchmark Capital, Kleiner Perkins. So if they take this seriously, we should as well. Okay, let's begin. What is an ICO for you guys who don't know? Well, basically, it's when you emit a cryptographic token. So what does it even mean? Well, I like to say it's like when you go to an amusement park, you buy tickets. Say you go to Grönlund, for example. You buy tickets, so you can ride a ride, and you can buy into the lottery. It's the same with tokens here. You can use these tokens inside the service or buy the goods that this company has. Or you can go outside the amusement park and say, oh, I don't want to use this. Do you want to buy this? Same thing. So let's put it in perspective. What is an ICO? So there's a bunch of types of ways you can fund a company, right? You can do private placements, you can do debt, and also you can do IPO and crowdfunding. So where does this play in with ICOs? Well, I want to say it's not an IPO, even though it sounds like it, as of now. It's much more like a new type of crowdfunding. Why isn't it like an IPO? Well, because it doesn't have the same regulations. Okay, cool. that's the first part. That's what an ICO is. So now let's go into what are the risks. Well, the risks are that this isn't regulated at all in large parts of the world. What does that mean? Well, it means that you shouldn't handle it as an IPO. You don't have any legal right when you buy it. The valuation doesn't come from any investment bank. And also, you aren't guaranteed that this will ever be listed on any secondary market. That is to say, maybe you don't have the liquidity that you are promised. Moreover, also they don't have any information requirements towards you as an investor. So they don't have to tell you if they actually built the product they say they will build, or if they reach the milestones they say they should reach. And what does this result in? Well, it resulted in like 90% of the ICOs out there today are unfortunately scams. That means that they have no product, they have no proven business model, and also a lot of speculation is going on the investor side as well. So you should be careful. And a colleague of mine said this, what I think is really brilliant, and that is, you shouldn't be blinded by the fact that this is some new type of funding. You should judge the companies you're investing in by the same terms that you judge them in a private placement. New type of funding doesn't equal new types of way of analyzing businesses. Okay? Cool. So now that we covered this boring stuff, let's go into the fun stuff. What are your promises with an ICO? Well, first and foremost, it's a way of democratizing funding. Like I said, today, the vast majority of the capital out there is controlled by PE funds or other types of funds, which is run by old gray-haired guys, right? So this is a way of you guys, the people, having a chance to invest in these types of companies. And if you see here, 98% of the investors in the US are non-accredited. That is to say, they can't invest in fast-growing small companies that do actual innovation. Also, seed funding, when it comes to seed funding, that is to say small companies raising capital, only some 1%, I think, is international. So if you go out and raise capital, say between 3 million and 10 million, it's really hard to raise capital from overseas. It's even harder to raise capital from another continent. That's not the case with ICOs. It's a global investment base. Really cool. Secondly, it's a way of increasing liquidity. Okay, so why do you want to increase liquidity? Yeah, it's because if you guys who are entrepreneurs in the room, if you have increased liquidity, it means low risk for the investors, it means you can get more capital faster and more and earlier on. It's pretty absurd being an investor, actually. I know it's hard to be an entrepreneur, but it's pretty absurd being an investor when it comes to early stage companies, because you invest in something that maybe they don't have a product, maybe the product hasn't been proven anything, they don't make any money, and maybe you will get some money 5-8 years down the road. So it's really, really high risk. So anything you can do to mitigate these risks is of real high value. That's why ICOs is exciting. A third thing that is not all the time mentioned, but it's really exciting, is that aligning stakeholder interests. Okay, what does this mean? Well, in a company, you have different types of stakeholders, right? You have the management, you have the owners, shareholders, and thirdly, you have the customers, right? And all these are involved in the company, and all these matter to the company, but they have different incentives, right? By having ICO, by having tokens that are distributed to all of these different stakeholders, you align their interest, which is really, really, really cool. It isn't, you could say, oh, you can do this with shares as well. Well, you can't really, because, I mean, if I go and buy, for example, if I use Facebook, I don't really buy their shares for that sake, right? Because I can't really do anything with the shares except be investing, and aren't as easy to get by, right? That's why it's exciting. Okay, fourth, and the last one, automated processes. So today, if you buy a share, all the things that happen in the company, if you do a new issuance, if you do have dividend, if you have options, voting rights, everything you have, all is handled like with pen and paper pretty much, right? By having the security being inherently digitalized, you can have everything automated. That means faster processes. That means also everything can be more reliable. And you know, financial systems are pretty, I mean, everything looks pretty easy from the outside, but financial systems all around the world is really, really complicated, and there's a lot of parties being involved just for an easy transaction. And a lot of parties means not as reliable, not as fast, and it means a lot of middlemen having to have their cut, right? So this way we can have more efficient systems and cheaper. Cool. So now we have covered some basic promises of ICOs. So I would like to delve into two specific topics more deeply. The first one is non-binary financial market. Okay, that's a nice sentence, right? What does it even mean? Well, let me just give you some background here. So the thing is, it's been a large change in the world of companies and in the world of finance. That's actually one of the reasons we started Calora from the beginning. So what is that change? Well, if you look here on the left, you see there are lines, right? So the old companies have really long lines, and the younger companies have really short lines. So the lines is how long it has taken to reach $10 billion in valuation. So you can pretty much see that what took like 100 people, 100 years, now takes like 5 people 5 years to build. Companies grow ever faster. Also, you see the orange lines is when they actually go public. These companies down here don't really have any orange lines, right? It's only blue. So companies are growing ever faster, and also they are staying private. They don't go on the stock market. So you guys who want to have a good investment portfolio, you have to also invest in these private markets. And also you can see that also correlates with this graph for venture capital. Venture capital has exploded. It's now exceeding $220 billion worldwide. Okay, so now we've seen that it goes from the public market to private markets. What is the difference? What does it even matter? Well, it's a vast difference, actually. So the first thing is public markets have hyper liquidity. I can go into Avanza or Nordnet or whatever, and I can sell and buy shares whenever I want, however I want, right? And these companies have high demands on regulations, some information requirements, and so on. Highly regulated. Private market, on the other hand, zero liquidity, like I spoke about earlier. As an investor, you go in and you wait 5-8 years and you hope something gets back, right? And also, they have to pretty much drag the information out to the entrepreneurs. They have to write in the shareholder agreement, like, you have to give me information this year and that month. So vast difference here between. So what does this matter? It matter because when you have this vast difference, it means higher cost of capital for private markets. It means it's much harder to get capital, and it's much more expensive for the entrepreneurs. So we at Calora, we see ICOs may be a middle way for this. It may be a solution to not have this black and white market we have today. We can have it regulated in some way, but it doesn't have to have the same information requirement that they have on the Nasdaq Stock Exchange. You don't have to have the same liquidity as you have in the Nasdaq, but you can have some liquidity at least. So you maybe can sell something within at least 6 months, right? This is very cool. Okay, cool. So now we're delving into financial markets. The other thing I want to delve into is venture capital and ICOs and how those interplay. The thing is that has occurred not so much in Sweden, it's pretty quiet here in Sweden, but has occurred much more in Silicon Valley, for example, is that the best entrepreneurs, they see no real point in going to VCs, booking the meetings, sitting there, doing the pitches. Takes a lot of time, takes a lot of effort, a lot of large term sheets and all that. You have to, shareholder agreements you have to sign. You have to give up your company if you don't reach any milestones. And also it's expensive with all the lawyer costs, right? You can't raise as much. So why don't you just ICO? It takes like 2 months. You don't have to be diluted. You don't have to get up in the shares. You get much more money, right? What does this mean for the VCs? Well, the VCs are scared, I can tell you. What the VCs have to do is either of two things. Either they have to go into smaller rounds to catch these top entrepreneurs before they do an ICO, or they have to start invest in ICOs themselves. And this is what we saw earlier with Telegram, for example. Telegram is a company, second-time founder, where VCs have been knocking on the door forever and wanting to invest. So now they went to the LPs, that is their own investors, and they got the mandate to actually invest in these type of assets. And each of these Kleiner Perkins, Sequoia, and Benchmark invest in $20 million each. So for the VCs, this actually means, for you guys who are investors in the room, it means a new type of risk. This one doesn't have a name, so I just call it token risk. And what I mean by that is that as the company grows, either you have invested in stock in point A, and in point B, the entrepreneur decides to do an ICO. So where will the value increase be, right? Will it be in the stock, or will it be in the token? Or the other way around, maybe you invested in the ICO, and then the company goes and does a public listing, right? Where's the value increase? Maybe, I mean, you did the right bet, but didn't get any of the value increase. That sucks. Also, as of today at least, you have to exchange these tokens into either Bitcoin or Ethereum or whatever. So there you also have a large exchange risk. I know everybody in the room are familiar with the volatility of these currencies, right? So how can we regulate this, right? Well, in Sweden, we are way behind. It's ridiculous. So I like to look at what they have done in Switzerland. In Switzerland, it's very, very easy to do this because it's very clear in the regulations. They have divided tokens into 3 different categories. That is, first and foremost, a payment token, as Bitcoin. Secondly, we have utility token. And that's when you actually use it, as I said, in Gröna Lund or any other amusement park for buying the goods or services of that company. You shouldn't market this as investment. You shouldn't have it in a secondary market. And thirdly, you have the security asset token, which is actually like a stock, right? I won't go into this, but this is also how they divide it into different stages of the company. If you have pre-financing, you have the voucher, pre-operational, then you're operational, and you have different requirements on regulations in different stages. So there is a blueprint for this already existing, and it works pretty well. That's why Swedish companies doing ICOs, they don't do it here. They go and set up a foundation in Switzerland instead. That's pretty sad. Also, we can see some self-regulation. How long do I get? Minus 2 minutes. That's terrific, right? I want to just end with saying that what we should do is we should be open to some regulation, and there are 3 specific things we should do. We should handle less asset security, but maybe like to a less extent than a normal stock. We should have information requirements, know your customer requirements, and also normal dividend and voting rights. Thank you so much. I'm glad you listened.
Big hand to Simon.